FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 1/9/20. Well, man, the markets were in a complete state of flux, going crazy last night with the Iranian missile attack. But what a difference 6 or 8 hours makes. All of a sudden, new highs on the S&P. What is a trader supposed to do? How are you supposed to make money on this and not let these gyrations break you? Well, that's why we're talking to Chris Vermeulen, thetechnicaltraders.com. Chris, hey, Happy New Year. And what a day, huh?
Yeah, Happy New Year to you, Kerry. Yeah, wild day. It feels like it's been a wild, week and a half in the markets in general. But man, last night and this morning, the price whipsaws we're seeing are pretty incredible. I mean, missiles go firing last night, and we saw gold jump 2% in a heartbeat. And we saw oil jump 5% last night. The stock market collapsed about 2%, depending on the index you're looking at. And I mean, it's just prices are all over the place. And of course, it happens outside of regular trading hours. And the average Joe doesn't really, I mean, they might be able to follow it online, but the average Joe doesn't really see what happens in overnight trading. And, the market's opened relatively flat, almost like nothing happened. And it's interesting because, gold rallied 2%. It opened flat on the day. The stock market fell about 2% overnight, and now it's rallied all the way up, and it's up 2.5% from the lows from this morning. But the average investor has no idea what really happened or the price swings that we're seeing, because the market opened at the same price it closed yesterday, and same with oil, more or less. So the market is great at deceiving the masses. There's all kinds of crazy price action going on, but it seems to happen outside of hours when the average Joe would see it, and it kind of keeps people calm and collected, like there's nothing too extreme going on. But as a short-term trader, we're looking at these charts, and you look at the 24-hour clock chart of them, and it's just complete whipsaw in the market, and it's a news-driven market at this point.
Yeah. Well, it's just amazing that hey, we were just kidding, no big deal, no World War III, everything's fine, but I think it is noteworthy the fact that gold broke 1,600 last night. Granted, didn't close there. It was after hours, access market trading, but nonetheless, it broke 1,600. I mean, that's a key signal, isn't it?
Yeah, it's a big number. I mean, the whole numbers like that, like 1,600, 1,700, those big whole numbers, they act naturally as a resistance level. So, just like when we broke above 1,400, it held at that level, and then once it broke it and extended, it ran all the way to 1,500. Then it's been pulling back, and now it has run again to 1,600, and now we're starting to see a pullback. It's moving in $100 increments, more or less, and the pullback we're seeing today from the highs of overnight trading to now, I mean, it's nothing too significant in the grand scheme of things. When you look at the big trend, the moves we've seen recently, gold's had a huge run from 1460 or so all the way to 1600. So for it to pull back and consolidate for a couple weeks or even a couple months is a very bullish sign. Really, we don't want gold to just keep going straight up, because what goes straight up comes straight back down.
Oh, yeah.
In the short term here, it has gone straight up, and it's starting to come back a bit and consolidate. And so everything going on today is really in line with the key underlying trends for metals. I mean, you look at gold miners, they're down 3.5%, 4% today. It's a pretty big move, no doubt. But when you look at the chart and the runs that they've had, I mean, this is very longer term. This is bullish price action. We need to see this selling. We need to see some profit taking, and that's just what's happening right now in the precious metals market.
Yeah, it's fascinating to see. And silver is behaving exactly the way you expect it to. It's lagging. I mean, it was down to below $17 before the rally started in gold. Now it's, in the 18 plus dollar range, but nonetheless, it's lagging the advances because gold 30-day, it's up $100, almost 7%. 1 year change, it's up $276, up 21.5%. So it lagged the stock market, but nonetheless, silver is lagging gold, and that's exactly what you'd expect to see here.
Yeah, I think silver. I mean, I'm gonna do some charts in an article that I'll send you to post on your site on silver, because there's some really interesting chart patterns forming when you look at the long term and the COT data. There's a lot of really cool stuff going on, and silver is like, it's getting ready to be like a rocket ship and really take off. And I love silver. It usually lags gold, and then it just out of nowhere, well, not so much out of nowhere, but eventually it just takes off and starts to run. And we're getting closer and closer to that level, I feel. And there's some significant patterns that we're seeing now that are similar to what we saw years ago. And I remember the breakout and the run, and I think we're getting close to something similar. So silver is a sleeping beauty right now, and it's primed and ready for some pretty big explosive moves, similar to what I think we saw back in 2010 when it broke out of a major pattern and it went from $18, pretty much where we're at right now. It went all the way up to pretty much $50. So there's some pretty interesting price action in silver that is exciting.
Yeah, and silver is the only commodity in the past 40 years that has not made a new high.
Interesting. I didn't know that.
Yeah, it's the only one. Every other commodity out there has made a new high, but silver in the past 40 years. Because think about it, the last time silver made its high, it didn't break it last time in 2011, but before that, the last one was in 79, and the Hunt brothers and all that stuff. So
right.
So that's an interesting number too. Hey, what about oil? So that perked up a bit. Oil headed up. It was up for the year pretty substantially, mainly because it was so depressed the year before. What are you seeing there?
Yeah, crude oil is to me. I'm bearish on it. It's still in an uptrend today. It's got some really wild price action. Oil was up almost 5% last night on this news in Iran, and now today it opened relatively flat, and now it's sold off almost 5%. So I mean, we're looking at like a 8, 9, 10% swing in crude in the last 12 hours. The average Joe wouldn't see that rally happen overnight. They only see the market open where it is today at 9:30, and then continue to sell down. So I mean, there's so many of these stealthy moves, these washout highs and washout lows. To me, it feels like commodities, oil, metals have had a washout high. They all flushed out an exhaustion pop last night on news, and now they're going to consolidate for a while. The stock market was a washout low, tested some key support zones and ripped back to the upside. So going back to crude, I like it as a short-term bearish play. I think I need to see how the next few days are going to play out. It's got a reversal type pattern forming, and it looks like it could very easily drop right back down into the $56 per barrel area. Could go all the way back down to the 52. I mean, this level that it's reached in the last couple of trading sessions, the last two times it reached this level and reversed down, we saw an 18% drop in crude. So there's a lot of room for this to go lower, and we could be back down to the very low 50s and test those lows that we saw earlier last year around that 52, 51 area. So I like it as that type of play, and I'm going to let it form a bit more of some type of bearish formation to confirm that today's reversal has some points behind it.
Yeah, interesting. So what about the U.S. dollar? I mean, you're in Canada. You've been just creamed there by the, at least in part due to the Trudeau election. What are you seeing for the U.S. dollar?
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. The project has tremendous expansion potential as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
Yeah, the U.S. dollar has been trading lower, but in the grand scheme of things, when you're looking at the weekly chart, I mean, it's down at support. It's had a nice three-wave correction really since last September. It's been in a corrective phase, and it's at a point here where it should start to find a bottom. It should start to rally, and it is starting to do that today. And I do feel as though that bounce in the dollar may put a little bit of downside pressure on commodities, especially the precious metals. Overall, I mean, commodities were overbought. They're starting to pull back. The dollar was oversold. It's starting to rally. They typically, not always, but typically move in opposite directions. So I'm looking for the dollar to find support here, or at least hold its ground for a while. But overall, the dollar is still in a very strong uptrend. And the Canadian dollar, the loonie, has been on a tear simply with crude oil moving higher. The Canadian currency does mimic and follow very closely to what the price of crude does. So today's drop in oil is showing a potential reversal for the Canadian loonie to start to maybe put in a bit of a top and pull back.
Yeah, I saw it hit 77 cents. So it's been trading like in that 75, 76 range for months. So maybe it's going to break out, but I guess, like you say, depends upon oil, what oil does there. Interest rates, any opinion there?
I don't really follow the interest rates too much. I mean, I think we're going to see bonds start to firm up and start to move higher. I think they're in the early stages of starting a new uptrend. They've been in a consolidation phase for a while, and obviously if bonds start to rise, that'll affect the rates, and I think there's going to be fear creeping into the market. I mean, everyone seems to be bullish today. We're hitting new highs on the indexes, and everyone's moving out of the safe havens. But I think it's more of a big reaction and a rebalancing and going on with funds and things like that. But when the dust settles, really gold or the precious metals and bonds, I think, are on the verge of starting something very significant to the upside.
Yeah. It's just funny. Iran attacks and stocks go higher.
Yeah, I heard that the Fed dumped in $150 billion last night. So you got to wonder, like, how much of that just juiced the market straight back up to recover and save the day, so the market didn't gap down, 1-2% and scare everyone, right?
Yeah. Well, it's as much economic warfare as it is military and cyber and all that. When you think about it, keeping the dollar strong, keeping that facade, keeping the markets going higher is kind of sending a message to our adversaries. How long it's going to last is beyond me. I've felt for years the stock market was living on borrowed time, but again and again, it proves us wrong.
Yeah, and that's why I love technical analysis, is because, I mean, yes, I feel like the market's been ready to top since 2015. But as a long-term investor, there's no way we can get out yet. It's still in a raging bull market. We haven't had a real technical breakdown yet, and it defies gravity. It's climbing this wall of worry. Everything feels like it's BS news and all this money going in to pump the markets up. But I mean, you can't fight the trend, and that's the nice thing about the technical analysis, is it keeps you with the trend until proven wrong, and then you flip directions. And I mean, right now the stock market's in an uptrend. Metals are in an uptrend. Bonds are still in an uptrend. It depends on the time frame you're looking at, but overall, I mean, you just got to stick with them and hold true.
Yeah, and watch those indicators very closely, because the market could turn on a dime. Last year, all the earnings, the higher stock prices, had nothing to do with earnings, which were flat. So it was all about PE expansion, right?
Yeah.
So
yeah, it's interesting because trading's been really great for several years. I mean, it's been just follow the trends, use technical analysis. It's last night when finally, you hear missiles being shot at the U.S. I think it struck a nerve with a lot of people, or at least did with me. I mean, I started to have like kind of flashes of the gut feelings about like back in the Gulf War. I had a friend who was a jet fighter in the Gulf War, and just that terrible feeling of war and the it's kind of scary. Like the U.S. goes and shoots and kills someone, and then a couple of days later, the country fires missiles back. Obviously, I mean, they're saying it's not war, but I mean, that's kind of war.
Yeah, usually.
One team killing one person, the other person fighting back. I mean, it's kind of scary, and it's going to add a new dimension to trading. Trading has been great. It's been really straightforward for years, and now you add the war element into it. I think it's going to change things a little bit more. Things are going to be jumpy, a little more sensitive. People are going to panic and a little bit more. So I think it's going to change the way the markets start to move here. That's my gut feeling. And we're seeing that volatility in the markets ever since New Year's Eve, when the U.S. took out the terrorists, more or less, and that was the first kind of attack, right? So the markets have been jumpy, and I think that could carry on for a long time. And we're going to be a technical trader in dodging war news and war events.
So first sign of hostilities, they're going to be just blowing out stocks, huh? And I guess they would have done it last night. So maybe the Iranians were concerned about Wall Street, and that's why they did it at night after the closing.
Maybe. You never know.
Well, the mullahs might have they might have some exposure in their own personal portfolios, or the mosque investment club, right?
Yeah, well, I mean, in the perfect world, they would have took on huge short positions, bombed, and then covered their shorts.
Right, it was kind of like 9/11, like 9/11.
They could have in overnight trading with futures. So
yeah, you could do it, but and who knows, maybe they did. But if they did that, then they just got wiped out. Like, it's kind of like trying to short Tesla. I happen to like the company a lot. I believe you buy the car and short the stock. But, on the other hand, they'll probably produce close to 750,000 vehicles next year with the China factory coming online. You got to have balls the size of coconuts to short a stock like Tesla. It's destroyed so many people.
I know. It's. I remember back when it was trading at $37 or $38 on the verge of a big breakout. I never bought it back then. I was bearish. I mean, it's funny because you're super bearish on Tesla, and it seems like everyone hates it. But I mean, it's like the never-ending climbing stock, and it's funny how everyone wants to like own the car and short the stock. You hear that so much, and of course and then the stock does the exact opposite. It's interesting because my brother-in-law has a Tesla, and he lives and swears by them and loves them and loves the company and stuff. And I mean, it's two huge extremes on that stock. I mean, people love them or hate them. It's really interesting how it's changing the world, and it's got lovers and haters, and
a lot of haters, a lot of Tesla haters out there. My hat's off to them, because nobody since I've been alive, and nobody since World War II, even before that, has successfully started a new car company in the United States and actually gotten into production of hundreds of thousands of units per year. No one has done that. That in itself is such a huge feat, and I don't think that the average person really understands what a big deal that is.
Yeah.
So.
Yeah, it'll be interesting. I mean, if the guy can create rocket ships that land and fly around the world and do all that stuff, I mean, you got to think he can muscle up to sell enough cars that he becomes known, right? Yeah. It really sounds like nothing. Really, it's just to build a good electric car and market the heck out of it. And I mean, if you can fly to the moon and back and land without anybody touching a button, I mean, that's pretty incredible. It puts marketing and building a car to shame, really.
Hey, and as we were speaking, gold is only down $1.90 an ounce. It was down $15 a few moments ago. And talk about volatility. That's a huge move for gold. $10 in in literally 5 minutes. Yeah, definitely. The Tesla is pretty remarkable. Also, the safest vehicle on the road for a number of reasons. I don't know if it's the self-driving or not. I mean, the media loves to concentrate on when there's a crash, when the thing's on autopilot. They just love it, but it's still safer than virtually any other car on the market now. So all of those things,
I think it's a huge benefit. We've got a vehicle that more or less, if you're on cruise control, it keeps a nice space cushion. And if somebody slams the brakes on, the car slams the brakes on and it knows to, threshold braking. And it's nice to know because you turn your head, you're dealing with the kids in the back for one split second. If something runs in front of you or somebody hits the brakes, at least the car's going to stop for you, right?
Yeah, exactly. There was that guy who was drunk in California, fell asleep behind the wheel of a Tesla, and the car kept going straight in the lane, probably was passing people too. And the cops saw him and they couldn't get him to wake up. So finally they got in front of him and jammed the brakes on.
Boy. Yeah.
They were able to stop him.
Crazy.
Crazy thing. But look at it this way. It might have very well saved that guy's life. If he had passed out without it. Right. So that's pretty cool.
Sensors are more sensitive and more accurate than humans, right? So you had an iPhone in the picture or eating or drinking or kids or pets. I mean, your reaction time at points are nil. So the software will automatically kick in and override your lack of focus at points, right?
Yeah, sometimes it's a little more careful than I am. If you get a little too close to the car in front of you, it starts beeping and you get any closer, it would throw the brakes on. But for the most part, it's going to do a better job than humans. Well, there's still a place for humans, though, in trading, right? The algorithms, the computers, they don't totally have us beat yet, do they?
No, they don't. I mean, people like to say the markets don't move anything like they used to, but I mean, the reality is I think they still move almost exactly the same. I mean, price patterns are the same intraday. We still have the same turning points during certain times of the day and the month and year. Like things haven't changed. We still get an up day and a down day every day. And you just follow the price action. And I mean, if you want to compete with these high frequency trading systems, there's to me, there's no point unless you got like billions of dollars and you're trying to, scalp a fraction of a penny with a million shares.
You can't do it.
But as an individual trader, a swing trader, I mean, we're catching plays that, these automated systems aren't exactly manipulating. They're looking for high momentum, high volatility plays. They get in and get out. And
I totally agree. All right. Well, hey, so go take a look at Chris's site. You'll find it, thetechnicaltraders.com. There's a link to it in the show notes to this interview. Just tell us quickly about what you can expect there.
Yeah, every day I give out a morning video and I recap on what happened yesterday, what happened in overnight trading and pre-market, and then I explain what we're going to expect most likely at the opening bell and how it'll affect any positions that we have and if it's going to create any new positions. So pretty straightforward. I focus on relatively short-term moves, looking at the day and looking forward a couple of weeks. And I cover gold and silver and miners, oil, natural gas, and the indexes and bonds as well. So more or less just the key assets, and you get a good grasp of what's happening and why and where the next levels are for turning points or new entry points in the market.
Yeah. Hey, and what about experience level? Because I've been in the markets for my whole life, but my experience as a trader, I just don't have it.
Yeah, I mean, I think it takes years you got to do it all the time to get the experience. I know a lot of people get into trading and they try for a few months or a year, but really it takes commitment. I feel like it takes decades. I mean, you got to live through one bull market, bear market cycle, one full swing from, everyone accumulating to topping phases to bear markets to times when there's no interest in the markets and then rinse and repeat. And I've been through two of those. I think we're about to start a third one. So, I mean, I've been around the block and it seems like kind of second nature. And those markets are very slow, big bull market to bear market. But I mean, really time doing something is how you get experience. And I've been doing it since 97. And I live and breathe it, and I love it, and it's my passion. So I really enjoy trading, and I love these volatile markets, people panicking and freaking out. And, I just look at it going, oh, these are going to create some new setups, right?
Opportunity knocks. Hey,
yeah.
All right. Questions or comments for Chris, myself? Email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page is Financial Survival Network, and our home site, financialsurvivalnetwork.com. And Chris, we'll talk to you next month, see what's happening.
Hey, thanks, Kerry. Always a pleasure, and talk to you soon.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.